Diving into the stock market can seem intimidating at first. The sheer volume of information, the fast-paced environment, and the complex terminology can make anyone feel overwhelmed. It's like a bustling city with its own language and rules. Just like navigating through a new city, understanding the stock market requires some time and effort. But don't worry, we'll break it down together. With the right guidance and resources, you can demystify the stock market and start making informed decisions. You too can learn to navigate this world and make smart investment decisions. It starts with understanding the basics and gradually building your knowledge. Remember, every expert was once a beginner. Even the most successful investors started with little to no knowledge about the stock market. Think of the stock market as a marketplace for companies. Just like any other market, it's a place where buyers and sellers come together to trade. Companies issue stocks, which are like little pieces of ownership in the company. When a company wants to raise money, it can sell shares to the public. When you buy a stock, you're buying a piece of that company. This means you own a small part of the company and have a stake in its success. As the company grows and becomes more profitable, the value of your stock can increase. This is how investors make money in the stock market. Of course, there are risks involved. The stock market can be volatile, and prices can fluctuate widely in the short term. The stock market can go up and down in the short term. This volatility can be nerve-wracking, especially for new investors. But over the long term, the stock market has historically trended upwards. This means that despite short-term fluctuations, the overall trend has been positive. That's why it's important to invest for the long haul and not panic if the market takes a dip. Staying calm and patient is key to successful investing. Remember, investing in the stock market is a marathon, not a sprint. It requires patience, discipline, and a long-term perspective. It's about making smart decisions, being patient, and watching your money grow over time. Consistent, well-thought-out investments can lead to significant financial growth. With the right knowledge and approach, you can make the stock market work for you. Educate yourself, seek advice when needed, and stay committed to your investment strategy. There are plenty of resources available to help you learn. Books, online courses, and financial advisors can provide valuable insights and guidance. Joining investment groups or attending seminars can also be beneficial. Sharing experiences and learning from others can accelerate your understanding. Regularly reviewing your portfolio and setting clear financial goals will keep you on track. Stay informed about market trends and adjust your strategy as needed. With dedication and the right approach, you can achieve your financial goals. The stock market offers opportunities for growth and financial success. So take the first step, start learning, and embark on your investment journey. The future is bright for those who invest wisely. Before you jump into the stock market, it's crucial to do your homework. Investing without proper research is like sailing without a map. You might end up lost. Just like you wouldn't buy a car without researching it first. Understanding its features, performance, and reliability, you shouldn't invest in a company without understanding what they do and how they make money. Knowing the ins and outs of a company can help you gauge its potential for growth and stability. Start by looking at a company's financial statements. These documents are the backbone of your research. These statements provide a snapshot of the company's financial health. They include the balance sheet, income statement, and cash flow statement, each offering unique insights. You can find them on the company's website or on financial websites like Yahoo Finance or Google Finance. These platforms offer a wealth of information at your fingertips. Don't be afraid to dig deep and ask questions. The more questions you ask, the clearer your understanding will be. What are the company's products or services? Who are their competitors? How do they stand out in the market? What are their plans for future growth? Are they innovating or expanding into new markets? Understanding their strategy can give you a sense of their long-term potential. The more you know about a company, the better equipped you'll be to make informed investment decisions. Knowledge reduces risk and increases your chances of success. Remember, knowledge is your most powerful asset in the stock market. It's not just about numbers, it's about understanding the story behind those numbers. By taking the time to research and understand your investments, you'll be well on your way to making smart decisions and growing your wealth. Patience and diligence in research can lead to rewarding outcomes. Fundamental analysis is like being a financial detective. It's about looking beyond the stock price and digging into a company's financials to determine its true worth. It's about understanding the engine that drives a company's success. One key aspect of fundamental analysis is looking at a company's earnings. Earnings are the profits a company makes after all expenses are paid. Strong earnings growth is a good sign that a company is on the right track. Another important factor is debt. How much debt does the company have? High levels of debt can be risky, especially if the economy takes a downturn. You want to invest in companies with a healthy balance sheet. Fundamental analysis can seem complex, but it doesn't have to be. There are plenty of resources available to help you learn, from books to websites to online courses. The key is to start simple and gradually build your knowledge over time. Diversification is like not putting all your eggs in one basket. It's about spreading your investments across different companies, industries, and asset classes. This helps to reduce risk and protect your portfolio from market fluctuations. Think about it this way. If you invest all your money in one company and that company goes bankrupt, you lose everything. But if you diversify your portfolio, even if one investment performs poorly, the others can help to cushion the blow. Diversification is especially important for beginners. When you're just starting out, you may not have the experience or risk tolerance to make concentrated bets on individual stocks. Remember, diversification is not about avoiding risk altogether. It's about managing risk effectively. By spreading your investments widely, you can create a portfolio that is resilient and can weather market storms. Section 5. The Golden Rule. Buy low, sell high. This principle is the bedrock of investing, a timeless strategy that has guided investors for generations. The age-old adage of buy low, sell high is the cornerstone of successful investing. It's a simple concept, yet mastering it can be quite challenging. It sounds simple, but it requires discipline, patience, and a keen understanding of market trends. You need to be able to identify when a stock is undervalued and when it has reached its peak. Imagine you're at a farmer's market. The principles of buying and selling stocks can be likened to shopping for produce. You wouldn't pay a premium price for bruised apples, would you? Instead, you look for the best quality at the lowest price. Similarly, in the stock market, you want to look for undervalued companies, those whose stock price is lower than their true worth. This requires thorough research and analysis. On the flip side, when a stock's price has risen significantly and perhaps become overvalued, it might be time to consider selling. Recognizing this moment is crucial to maximizing your profits. You've made a profit, and now it's time to potentially reinvest that money into another opportunity. This cycle of buying low and selling high can help grow your wealth over time. Remember, timing the market perfectly is nearly impossible. Market conditions can change rapidly, and predicting these changes with absolute accuracy is a challenge even for seasoned investors. Instead, focus on identifying companies with strong fundamentals and a promising future. Look for businesses with solid financial health, competitive advantages, and growth potential. Buy when their stock price is discounted, and be prepared to hold for the long term, riding out any short-term fluctuations. Patience and perseverance are key to seeing your investments grow. Stay informed about market news and trends, but don't let short-term volatility shake your confidence. Trust in your research and the fundamentals of the companies you've invested in. Diversification is also important. By spreading your investments across different sectors and asset classes, you can mitigate risks and enhance your chances of achieving steady returns. Ultimately, the goal is to build a portfolio that grows steadily over time, allowing you to achieve your financial goals and secure your future. Section 6. Navigating the waters. Understanding and managing risk. Investing in the stock market always involves an element of risk. The market can be volatile, and stock prices can fluctuate due to a myriad of factors, both predictable and unpredictable. One way to manage risk is to never invest money you can't afford to lose. This means having a solid emergency fund and a well-defined budget before you consider investing. Another aspect of risk management is understanding your own risk tolerance. Are you comfortable with the possibility of short-term losses in exchange for potentially higher returns over the long term? Or do you prefer more conservative investments with lower volatility? Remember, risk is an inherent part of investing. However, by understanding the different types of risk, diversifying your portfolio, and investing for the long term, you can mitigate potential losses and position yourself for financial success. Section 7. The journey to financial success. Patience, persistence, and profits. Investing in the stock market is a journey, not a get-rich-quick scheme. It requires patience, persistence, and a long-term perspective. Don't expect to get rich overnight. Building wealth takes time and consistent effort. There will be ups and downs in the market. There will be times when your portfolio is green and times when it's red. The key is to stay the course, stick to your investment plan, and not make rash decisions based on emotions. Remember, the stock market is a powerful tool that can help you build wealth and achieve your financial goals. But it's not a magic bullet. Focus on the fundamentals, stay informed, and remember that even small, consistent investments can add up to significant wealth over time. Section 8. Your next steps: taking control of your financial future. You've taken the first step towards financial empowerment by learning about the stock market. Now it's time to put that knowledge into action. Start by opening a brokerage account. This will give you access to the stock market and allow you to buy and sell stocks. There are many different brokerage firms out there, so it's important to compare fees and features before choosing one. Once you have a brokerage account, you can start investing. Remember to start small and gradually increase your investment amount as you gain experience and confidence. And don't forget to like and subscribe to my channel for more financial advice and tips. Remember, your financial future is in your hands. Start investing today and watch your wealth grow over time.